When you look actually at the inflation figures, and again, we spoke to the Chancellor yesterday, Andrew Bailey was also speaking at the IMF, so I don't know whether that narrative really goes out the window or needs to be repriced. But a lot of it has to do with fuel.
Yes, I think you're right. I think the good news from even today's inflation numbers in the UK, I was speaking to Ben Nabarro, our economist, this morning. Under the hood, actually, it's not as bad as the headlines suggest. You know, we'd hoped it would be nearer the 3% overall level for CPI, and we'd hoped that services component would be below the, well below the 6, really. And I think that is what you probably need to see to start that June cutting. And again, it's a little bit like the US story, and for us, we're going to be really looking very closely at core PCE next week in the US, and I think that number is really critical. We think it probably has to come in at 2.7%. Otherwise, I think our expectation that you could still see those June cuts in the US probably starts to get really challenged, and then you get into a very difficult period for the Fed to cut, particularly with the election cycle then coming up. And if you start cutting in, say, September, it's really probably very close to that election window.
I mean, Larry Summers is definitely an outlier, but he's also, saying we can't underestimate the fact that the next move could be higher.
Yeah, I think there is definitely some risks that could be the case because of that stickiness. And I think when you and I spoke a while ago, some of the easing in financial conditions that we'd seen at the back end of last year has perhaps triggered some of this stickiness and some of this re-acceleration in certain pockets of the economy. But what I would just say with the US in particular is some of the labour market data perhaps isn't as good as perhaps even Powell thinks it is, or at least the narrative suggests they believe it is. There are definitely cracks forming. I think even if you look at part-time jobs versus full-time jobs, that's a sort of set of data that tends to lead payrolls. And I think, again, that is suggesting some of those cracks are likely to come through more substantially to the US. And to our mind, the risk is the longer we see these central banks waiting to cut rates, the bigger the risk to the underlying economy. Probably the more easing then needs to happen if it's later, and the risk that you do really start to see a few recessions kicking in more meaningfully around the world, I think grows, Francine.
So I guess that's a problem for the end of the year. Is the dollar strength more problematic for certain asset classes?
Yeah, I think as we're seeing even this morning, that sort of FX vol is really likely to pick up. You're going to see that risk for emerging markets growing. It's going to be very difficult for them to perform with that dollar strength. And I think, the dollar strength narrative had been something we'd expected to see at the back end of the year, but now we're obviously getting that earlier on. I agree with you. I think there's going to be certain asset classes that are really going to find it difficult to perform well, and certain companies, of course, they're going to see their earnings downgraded on the back of that, which makes the Goldilocks scenario that many people have been expecting, particularly for the S&P, really difficult to achieve now. Our Goldilocks scenario is 5,700, but that is predicated on those rate cuts coming through, which, as we've discussed, are being priced out by the market, but also better growth coming through from these companies. And I think to get those two things together is looking more and more challenged. Of course, I think if you've got a better growth narrative for the markets, equity markets can cope with rates being priced out. But if those rate hikes being priced out are really because inflation's incredibly sticky and problematic and growth isn't as good as we think or hope, that's a really big challenge to hold even these levels.